India's economy has now sprung a surprise in the first quarter of this financial year 26. Fresh estimates show that country's GDP grew by 7.8% in Q1 of financial year 25-26. That's a sharp rise compared to 6.5% growth in the same quarter last year. The strong momentum has largely been driven by the services sector, which continues to power India's growth story. The services sector saw a 9.3% jump, up from 6.8% in first quarter of financial year 25, signaling continued post-pandemic recovery and consumer demand. Growth was also largely driven by a significant uptick in the secondary and tertiary sectors such as manufacturing, which grew by 7.7%, while construction sector also recorded a 7.6% increase in GVA, which is the gross value added. Agriculture and allied sectors also improved, registering a 3.7% growth compared to 1.5% in same quarter last year. And my colleague Kabir Naqvi joining us live from the newsroom. Kabir, the services sector continue to propel India's growth story. The first quarter springing a surprise for India.
No, you're absolutely right. Those are the headlines that I've been reading. India's economy growing 7.8% in, the April-June, months, the quarter one of the financial year 2025-2026. And that's the fastest amongst the major economies in the world, something that has been corroborated by major financial institutions across the world. In terms of what's actually been driving this growth, you pointed out as well, the services sector is the star performer here. We're looking at a growth of 9.3%. Which is at a 2-year high. And what's more is that what comes second in that list is the manufacturing and the construction sector and the tertiary sector also coming in, both nearing about 8% uptake. The agricultural sector also steady at 3.7%. This is double of last year's quarter one, which stood at about 1.5%, Shweta. And when you're talking about the demand side, something that you threw some light on earlier as well, the government spending has surged nearly 10% after being pretty much muted last year. The private consumption up 7%, a bit softer when we're looking at quarter one from 2024-2025. But then investment momentum was again high. It was strong. Capital formation was up 7.8%. People are saying, this seems to be like one of those good headaches for the policymakers. And this is why it essentially matters, because this is showcasing India as that strengthened, economy, as that bright spot in a gloomy, terrifying time across the world right now. It gives a cushion to the Indian economy against global headwinds, specifically the 50% tariffs that have been slapped for buying more Russian oil and quote-unquote, helping out Russia in their onslaught on Ukraine. And in terms of the policy angle, it's a big boost for policymakers in RBI because the growth is holding even in these terrifying times. The government reforms, very recently the GST and the Diwali double bonanza that the Prime Minister also spoke about, it is expected to keep the momentum going up for us. And economists say that this sprint gives an upside to financial year 2026, full year forecast possibly higher than 6.2%. Those are great numbers. I mean, you could expound better on that.
All right, very good numbers there. If anything, the first quarter numbers are giving a fillip to policy continuity in India and also a reflection of how well we have done in the first quarter of financial year 26. Let me quickly on the expenditure side, as you mentioned, government final consumption expenditure has also grown, although nominally to 9.7%. Private household spending, that's gone down. It's gone down, but not substantially so, at 7%, slower than 8.3% in the first quarter of last year. And as far as fixed capital formation, again, heavy lifting of the government, that's also gone up. So if anything, if these numbers are to go by, Kabir, it does look like government is doing a lot of heavy lifting right now, while household spending is not coming out as clearly and as formidably as we would want it to. But, going into what you mentioned by the way of Trump tariffs, because that's going to kick in, and that has kicked in a 50% tariff rate on Indian exports, a 25% penalty, 25% initial tariffs, essentially means that many industries, including agriculture, gems and jewelry, shrimp, will be impacted. And the government is also trying to ensure that there are alternate supply chains, that there are enough, enough strongholds kept in place, put in place to ensure that these sectors don't suffer in the long run.
No, you're absolutely right. Vikram Misri, the Ministry of External Affairs is currently holding a press conference, a wrap-up of what the Prime Minister said in Japan. And, some of the major standpoint statements coming from that press conference is that regional and global development bilateral ties were certainly discussed, but Vikram Misri says 50,000 skilled Indians are going to now contribute to the Japanese economic, growth and outlook. At the same time, with Donald Trump now pushing proposals for visas for Indian students and our skilled and technicians, skilled labor for the United States, all of that coming into jeopardy. It's again important for India, that bright spot in these terrifying times, to now diversify their outreach, and that's exactly what we're doing. When it comes out, then India needs the world. India needs the world at this point in time, and Prime Minister Modi has said it, that we're making in India, but we're making it for the world. That's the push that India and India's culture brings to the global
100%.
level. So, of course, at this point in time, India's economy firing on all cylinders. That's one aspect to take a look at. The floods have hit mining. Otherwise, these numbers would have been even more better.
Right.
The climate catastrophe has hit India, but apart from that, and the private spending going down just a little bit compared to previous quarter
Right.
one, all these numbers very bright.
100%. And I believe the monsoon and how it's impacted the economy will also be visible as the second quarter numbers come out. Remember, these are first quarter numbers where the climate crisis was not as bad as we are seeing it today, Kabir. But thank you very much for taking time out. Thank you for joining us with all those details.